Hello. So I wanted to discuss about the wedge pattern. If you look at the previous videos, I did another video on a wedge pattern, which was LDSD a few weeks ago. I think last month, early last month, probably. So there's a pattern that was playing out. I had identified it yesterday night, but I never got to share it. And obviously, it has already happened. So the only reason I'm doing this video is for educational purposes. So the idea is a rising wedge pattern. I just wanted to first of all show you how a rising wedge pattern looks like. Basically, wedge patterns do have either higher highs and a series of higher highs and higher lows, but you can see the prices are struggling to print higher highs, meaning that eventually it will succumb to this trend support to the downside. There's also the scenario of this is a rising wedge. There's also a falling wedge. Falling wedge is where obviously this pattern is an example is this one. This is a falling wedge. Yeah, so basically I want to show you an example, then show you how to put your stop losses and the target. Yeah, so it won't be a signal, it's just for educational purposes. Yeah, so let's see how prices played out. Basically, I'd seen this GBPUSD pattern yesterday. So obviously, these are how wedge patterns. How wedge pattern looks like. You've seen like it's trying to print higher highs, but when you look at momentums, the momentum is falling, meaning that all these are just false moves. These are kind of a reversal, a wedge pattern that behaves like a reversal pattern. So there are two cases in how we trade such a pair. First of all, in like the example of the LDUSD, you expect prices to push all the way to this trend line support, then pushes back to around this level, but with a divergence of obviously momentum. So this is always the first place where we put our sell entry, a stop loss obviously above, outside of the wedge pattern. Then we do always enter a second entry after breakout of the wedge. Wait for breakout of the wedge, a retest, then wait for the second move. So those are the two entries. So in such a case, this price, in this reason I actually didn't take so much interest in this pattern is that prices never reached this support trend line. So because I was expecting that the way they had reached here, then pushes back, but you can see like they printed a low here, then they pushed back to around the same level with a very strong divergence. You can see momentum was here, momentum on the same level was slightly low, was not slightly low, way lower, because here it was around 70, here it was around 60. Yeah, so that's a very strong reversal signal. So if you do enter this setup like an M pattern, your stop loss will be somewhere slightly around, you can put above the highest high or put outside of the wedge, because obviously prices might push to just retest this trend line again before they push down. Second entry is after a break of the support trend line, we wait for a retest, and obviously this retest, if you look, maybe an order block that was around the breaching area, it's where the prices do come to retest. That one you learn with experience. So after retest, and then you identify rejections. I wanted to show you how you identify the distance that you should be targeting to exit your position. So do you see the thickest part of I always do measure my take profit after breakout, that is, with the thickest part of this pattern, be it a triangle pattern. That is always my take profit one, be it a triangle pattern, be it a flag pattern, any pattern. So in such a case, I did measure my distance of the target that I was to target. You see the thickest part from the highest, from the swing high to the swing low. You see, from here to here. That's the thickest part of this pattern. So that's the criteria that I use to measure my take profit in such cases. Then after I do that, I always do identify where this arrow kind of ends. If the arrow ends around this place, I always like to exit my trades at either 000 numbers, 250 numbers, 750 numbers. You understand the quarterly numbers. So maybe 1,000, 250, 750, 500. So once I identify where my arrow reaches, I always look at a price that is around that place. So in such a scenario, if my arrow reached around this place, I would have exited at 25,000. If it reached around this place, I would have exited at 24,500. But then you see our arrow is in between 25,000 and 24,500. So obviously my target would have been around 24,750. This is not a signal, it's price action that has already taken place. I only decided to share because it's educative. Hopefully it will help you as you learn. I also want to share a setup that I had shared earlier, but it never really worked out as planned. So I'll just be sharing so that you may know that despite the mastery of price action, you will never know how prices will behave. So I did share this setup on Sunday, Monday morning before the market opened, and I remember I think I shared it around this place. So obviously my entry was around this place. My stop loss, I did analyze it as you can see, as an M pattern, a reversal pattern. Obviously my stop loss was above the OB that I was using for entry. My target was at break even. So you see, prices did push. The market was 100, the stop losses were 100, but still you can see that the divergence of price and momentum, like price printed a higher high, but the divergence still, the divergence of momentum and price still dominated. So obviously prices were to push lower to the neckline. But we took that L because prices did push above our area of interest. Though for people who do use these trend lines for such patterns, the trend lines for such patterns as their exit strategy. You know, there are people who live on charts. Like there's a person who will wait for the momentum to breach above the trend line so that they can consider exiting the trade. So for people like those, they did survive this trend. Otherwise, people like people who use my strategy where you just put your stop loss at the highest swing high of the M pattern, obviously was stopped out, but you can see that momentum, that prices did push to our area of interest. So however you take this example in your trading, I don't know you'll understand it, but I just wanted to show you that it's not always that prices will behave the way that they've been behaving. Obviously prices do behave like this once in a while, but in most cases they do, play out the way we expect. So that's where money management does come in. I will be doing a video one of these days about money management, how to calculate the lot size that you should be using according to your capital, how to identify. This will involve the time frame that you're using, the currency that you're trading, meaning that obviously different currencies have different spreads. Their volatilities are different. So smaller moves mean more pips, or smaller moves, small pips. You see. So I will be discussing about money management. In that topic, we'll obviously talk about calculating your lot size according to the stop loss that you're using, how much money you should risk per trade according to your balance. Those are the major things. Yeah, so hopefully you learn something from this video. It's a short one. Yeah, let's see how the week plays out. Yeah.